Ladies and gentlemen, welcome back to the channel. We are on the cusp of seeing the MOASS. This is very clear. If you have not seen the last video I posted, go ahead and watch that. Now, we're going to talk about what's happening in the markets today, what's going on with AMC stock, and everything else you need to know. So I hope you're ready. If you are not, buckle up. We're loading the rocket ship with fuel as we speak. Hit the like button and subscribe to the channel if you guys want to come trade with me live in real time every time I make a trade. Link down below in the description of this video for that. So, ladies and gentlemen, what's happening today is, again, another sign inflation is going to come in weaker than expectations tomorrow. Now, what I mean by that is your small and mid-cap stocks, your stocks that are heavily dependent and correlated on interest rates and or inflation, both interest rates and inflation, they have been outperforming the last 2 days. Today is, again, another outperforming day for those names. At the same time, your big tech is actually falling. This one, a sign inflation is going to come in weak, not as bad as feared. But you could also say it's because the NASDAQ 100 plans a special rebalance to curb the dominance of the Magnificent Seven. Now, this has happened twice in the past. Twice. In December of 1998 and May of 2011. May of 2011 is the important one. And we got a problem, okay, on a broad market basis. This could actually help out AMC if you're someone looking for the MOASS. You don't care about what happens to the markets. You're not trading the markets. This could help drive out some liquidity to our market. So this happened back on May 2nd of 2011. And what we actually seen was the following. May 2nd was actually the peak of the S&P at that time. The same thing with the NASDAQ. We'll just look at the S&P here. May 2nd through August 9th, about 3 months later, the S&P fell 20%. Now, the first month after this special rebalance, the S&P fell about 8%. So history would suggest, and about the same thing happened in 1998 as well. It just took a little longer. So what this means is you could be set up for some downside here. At least that is what history would suggest. Now, the problem is the NASDAQ says that the top 7 weighted stocks, Google, Meta, Tesla, Amazon, Nvidia, Apple, and Microsoft, have over a 50% weighting of the NASDAQ, a 55% weighting of the NASDAQ. Microsoft, Apple alone are over 12.5% weightings. Microsoft is a 13% weighting in the NASDAQ, whereas some smaller names like Meta is 4.3% and Tesla is 4.5%. I don't think those names would be affected as much, but definitely your big names like Google, Amazon, Nvidia, Apple, Microsoft, those guys, yeah, you could see some pain. Now, they are a vast majority of the NASDAQ. So if you see some pain there, odds are the indexes fall. Now, this is going to make for a healthier market, but with investors having a lot of their money in those big tech names, it's forcing them to diversify out, to broaden out their portfolios, as it's essentially going to guarantee some downside from here for those names. Could be another reason why AMC stock is in the green today. I don't think this is shorts covering by any means, but I mean, some money might be flowing into AMC today. And as we take a look at the options, you're definitely not seeing the most bullish options today. So even considering that, AMC up almost 3% is definitely a positive note. Now, with inflation coming out tomorrow, if inflation comes in weaker than expectations, we could be in for a lot of green for small and mid-cap stocks, for AMC stock as well. Now, for the inflation data, we're expecting month-over-month headline to actually reaccelerate to 0.3%. That's 3.6% on an annualized basis. Not a terrible number, but if this number comes in at 0.2%, markets are going to be very excited. Your headline inflation rate, this is probably going to be the most important number to watch. This is kind of what we have seen in the past. This is what gets picked up from news wires. We're expecting your headline year over year to come in at 3.1%. Last month's reading was 4%. So you're expecting a almost 3% reading for headline year over year inflation. Let me tell you right now, If this comes in under 3% at 2.9%, boy, we're going to be in for a lot of green in the markets. That's just the fact of it. Core inflation year over year is expected to come in at 5%. Previous reading was 5.3%. And your core inflation rate month over month is expected to decelerate as well, down to 0.3% from 0.4%. My estimates are headline month over month inflation is going to come in at 0.2%. That's 2.4% annualized. That's perfect. Headline inflation year over year is going to come in at 2.9%. Core inflation is going to come in at 4.9% year over year. And core inflation month over month is going to come in at 0.2%. If I am correct, well, that's going to be very good. Now, I think the outperformance of small and mid-cap stocks over the last 2 trading days now is a clear sign that inflation is going to come in better than expectations. Now, the following day, I don't think this data we have for the rest of the week will be as important, as CPI is really going to carry the weight. And whatever we get, we're probably going to see that reaction for days to come. But we're going to get PPI month over month for June coming in at 8:30 in the morning on Thursday. This is the producer side of inflation. You're expecting that to be 0.2%. Last month's rating was negative 0.3%. And then on Friday, Michigan consumer sentiment will be coming out. You really want to watch consumer inflation expectations. The 5-year has been trending up a little bit, so you definitely want to see that come back down. That's what we're expecting. We're expecting that to fall to 2.9%. And the 1-year inflation expectations, you definitely want to see that fall under 3%, preferably. We're expecting a 3.1% rating. So this is kind of what you have for economic data. You also are going to get bank earnings, JP Morgan, Citi, Wells Fargo, State Street, and BlackRock that report earnings on Friday in pre-market. These guys will also be important. If the banks aren't doing good, well, the broad economy's probably not doing so hot as well. Now, AMC is on the cusp of seeing the MOASS. That's the fact of the matter here. Now, why I say this, and this is a guaranteed fact in my head, do your own due diligence, come to your own conclusions. You need to be confident in what you're doing and what your thesis is. My thesis, well, like I said in the last video, we have seen 500, 1,000% dilution with AMC so far. Well, with this reverse split, with this trick accounting essentially, AMC is going to be able to raise a lot more capital. But this time around, a couple things are different. AMC is not burning through as much money. They're expected to beat earnings. Fundamentals have been improving this whole time. So you don't have this backdrop of this business that is in dire stress, that is in a bad situation. That's no longer the situation with AMC. They're not in the greatest situation. They're still losing, like $50 million a quarter? Not terrible, but also not the best. So I don't think that's such a huge factor anymore. But with this reverse split, AMC to raise $1 billion roughly would only have to dilute us 25% to raise $1 billion. If you're a short, you should be terrified of that. And these shorts, they're not. They continue to buy these put options. They continue to short the stock. As you can see, AMC stock is still on the threshold securities list. They continue to do the same bullshit that they have been doing, and it's going to screw them massively. Because you're not going to have to see a lot of dilution to raise a lot of capital. Now, what's worse, dilution or raising capital? Or what's better, I should say? Obviously, raising capital. The markets are going to quickly realize that, hey, we thought this was a huge negative, but actually it looks like it's going to be a big positive for AMC. Maybe we should go ahead and cover on our short positions. That's essentially the logic that will start to play out pretty quickly. And I think that's why AMC stock is not trading at the bottom. Now, we don't know when this is ultimately going to happen. We don't know when the judge is going to make a final ruling on this, but I expect or suspect it could be tomorrow. Wouldn't that be crazy? You get a ruling from the judge at the same time inflation comes in better than expectations. That would be ultra exciting. But if not tomorrow, it could be the rest of this week. It could be some point next week. That's kind of what I'm expecting. And everyone is so stupidly bearish on AMC. It's insane. take a look at some of the option activity we're seeing today. A July 14th, $9 put for $4.8 million. Let me tell you right now, if we get a ruling from the judge, AMC could fall initially, but after that initial fall, these guys are going to lose so much money, it's going to be ridiculous. I mean, look at these trades, dude. $2 million trade, $2 million trade, $2 million trade, $1.5 million trade. Multiple trades that are hundreds of thousands of dollars. Look, here we have some more. $1.5 million trade, $3.6 million trade, $3.17 million trade, $1 million trade, another $1 million trade. This is all today alone. A $3 million trade, a $2.5 million trade, a $1.5 million trade, a $1.27 million trade. Dude, these guys are delusional at this point. Another $1 million trade. Guys, seriously, if there is anything you have listened to or considered, it's this video as well as the last video. This event is the key to the MOASS, in my opinion. And I really can't make a bearish case for this court proceeding, for this catalyst, especially as everyone is so negative. If hedge funds institutions were bullish and they were buying some calls here, well, I would say maybe it's priced in. Maybe, we won't see that big reaction. But so many people are going to lose so much money all at once. You're going to get them covering in a massive way. Now, the short score, as I said in the last video, has never been this high. You've never seen the short score where it is right now. Even during the rallies in January and June of 2021, the short score was about 84 heading into the January 2021 rally and 77 heading into the June rally. You know what it is today? 95. You're more prone to short squeeze now than you have seen ever, essentially, with AMC. And why that is because the days to cover is up 90% in the last 3 months. Days to cover is sitting at almost 10%. You have 22.5% short interest of free float. That's the estimate. About $500 million currently in AMC short positions. Free float out on loan at about 34.5%. 178 million shares that are currently out on loan. Cost to borrow 224%. And utilization at 83%. I think this is mostly picking up the sells of APE from Intera Capital and others. Interactive brokers, cost to borrow fees hitting a new high of the cycle, 977%. Come on, dude. If we haven't even talked about the cost to borrow fees so far, and it sounds very bullish. Now we're talking cost to borrow fees, and they're almost 1,000% from interactive brokers. You gotta be shitting me. You gotta give me a break. These hedge funds and institutions have literally lost their goddamn mind. That's it. That's the bottom line to put it. Okay. Now, AMC stock is still on the threshold securities list. Live short interest of free float at 22.5%. Like I said, 116 million shares that are currently sold short. Cost to borrow average, 924%. Cost to borrow max, 1,060%. Cost to borrow minimum, 269%. Now, I don't know what day this ruling is going to happen from the courts. This would be a lot easier to pinpoint. But I know it's going to happen soon. And Morgan, the judge, has said it's going to happen unexpectedly. We're not going to get an announcement. And if that were to happen, well, we could be well above that 200-day moving average at $5.55 per share quickly. But it wouldn't surprise me at the same time to see a slight downside move upon the initial reaction until the markets actually do figure out that this is a huge positive for AMC and shorts start to cover on short positions. Wouldn't surprise me. Markets aren't very keen or smart to AMC, especially with this court proceeding for months now. They haven't realized that this is going to be a massive bullish catalyst for AMC. The only one that has is B. Riley Securities and Eric Wold, which thinks this is a huge positive for AMC. And the street that thinks this could cause the MOASS. So that's kind of my thought process. That's what I'm looking at. That's what's going on today. Let me know what you guys think about all of this down below in the comment section. If there's something I'm missing, then let me hear it. If you think this is going to cause the MOASS, let me know your opinions. If you think this is all bullshit and it's going to be just another bearish catalyst, let me know that as well down below in the comment section. Thank you guys for watching. Enjoy the rest of your day, and I will see you in the next one.